Hello, everybody, and welcome to the Kingdom Focus Financial March Economic Update. Got a little bit of a different flavor for you this month. We're here with Chuck Etzweiler and Derek Malden and myself, Michael Smith, in person. We're actually attending the Kingdom Advisors Conference located in Orlando, Florida, here late February. It's wonderful. We're able to sit outside, and we thought we'd talk to you a little bit this month with some behind-the-scenes stuff. So, Chuck, you help us with our portfolio development and management, and you're really one of the two people, along with Chris, that put a lot of effort into helping make sure we're picking the right investments to fit our clients' values and to match where they want to be. Can you just take a few minutes and help explain some of that process? Keep it simple for everyone to understand, but so that they understand how we go about doing this. Where do we come up with this stuff?
Well, I'd love to do it, and it's great to be with Michael and Derek here in this beautiful setting. The first thing we do is that we're beholden to the risk tolerance of the investor. So typically in our industry, there's 5 risk tolerances from aggressive to conservative. Then we start asking questions to ourselves in the committee like we do every week. What does the macroeconomic environment tell us? Do we like stocks more than bonds? And then within the stock universe, do we like large, mid, and small? Do we like domestic versus international? And as we really drill down, the interesting thing is, Michael, data supports this, that if you actually look at sectors, so sectors is a fancy word for industries, there's 11 of them. So you have utilities, you have energy companies, financials, healthcare, and the like. If you actually stack rank them on an annual basis, the dispersion between the highest and the lowest performer is 40%. So if you can overweight some of those, which you think are going to perform well, and underweight some of those that you think aren't going to perform well within a disciplined environment, you can actually provide the returns for a client that they come to expect. Take it one step further. How then do you choose the money manager? How do you choose the firm with whom you're going to work? How do your values align with that? Takes it down even to a further step. So what we will do is we'll say, hey, this year we like U.S. mid-cap funds. Well, what's the U.S. mid-cap fund that owns companies that are in the sectors that we like? The manager has a track record. Hopefully it aligns with what we believe is going to be the future. And then we begin the process of saying, well, how do they select their companies? What criteria do they use? So it's a confluence of all of those. And I think at the end of the day, it's all about trust. And our clients want to know that there's a process. We stick to that process, and the process is discipline.
So I hate to disappoint all of you who thought we had a dartboard in our office and we blindfolded ourselves and threw darts and said, that's the one.
Yeah.
Now you know we put a little bit more effort into it than that. So,
I like that.
Derek, any questions you have for Chuck?
Yeah, so Chuck, can you explain a little bit about how far we're looking into the future when we're trying to make decisions on our portfolios or changes that we want to make to our portfolios?
Yeah, we get that question quite a bit. So obviously, if you're in the trenches like Chris and I are, we're watching this second by second. But we're not traders, so we're not making changes second by second. We have a weekly investment committee meeting, which we're all on.
Yeah,
every Friday at least my time when I'm in California, it's 11 a.m., but it's
2 p.m.
2 p.m. 2 p.m. Eastern.
right before your nap.
Unfortunately, I don't have enough time for that. But we discuss, okay, how the portfolio is doing. Is there any newsworthy items that would cause us to potentially make a change? But then on a quarterly basis, we're doing a formalized review where we say this manager no longer is meeting our expectations. He or she is on a watch list. We then begin the process of entertaining somebody new for that. So it's instantaneous. It's weekly review, quarterly formal review. And that's really the industry standard, but we really try to communicate as best we can. I mean, you and I, Chris, we're talking on a daily basis. And so hopefully people understand the process is not just on a whim. There's a disciplined strategy behind that and structure.
Absolutely.
On another note, so when we start to pick different funds or individual stocks that we may choose, we go a step further and look at the values alignment. Can you speak a little bit about that?
Absolutely. And certainly Tim was here earlier and did a great job in describing kind of the relationship. Inspire has an unbelievably robust tool that allows us not only to look at the ethical component of an underlying company and their values. Who are they supporting or not supporting? But also the fundamentals of the business. I mean, you can own a company that maybe is highly ethical, but they just can't execute their strategy correctly.
Mhm.
We wouldn't own that company. And certainly, we wouldn't own a company that maybe is excellent in executing their strategy. They got a wide moat to the best in the business, but they have ethics that don't actually align with ours.
Sure.
So it's a two-tone process there, and that tool is exceptionally important in us making that final decision.
Perfect. All right, so we're here in late February. I'm going to shift from a little macro view to one just current point in time question that I've been getting a lot recently. Not hoping to throw you a
That's all
curveball,
right.
hoping this is simple, but a lot of questions and talks in our current recent new president environment regarding tariffs, right, and what that may mean. And I've had questions related to how does that change how we invest, or what does that do as we look at the future of the economy? Do you have any thoughts that you can share with us on what to expect or what that may impact?
Yeah, I do. And as both of you know, we've been sitting in these presentations, and it's been the hot topic of the day. There's no doubt about it. There's two sides of the coin. One says that if these are imposed, that they're going to be inflationary, and that it's going to spiral the economy either into inflation or we create something called stagflation. The other side says that they're just a negotiating tool by the president, the art of the deal. And what he proposes of doing is putting a tariff on a country, and the country says, no, 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 we still want to do business with you, and they renege. I think the best way I can answer this, Mike, is we don't know yet the ramifications. We can guess. And hopefully our investors and clients understand that we need more information. Now, once we get that information, we can understand if country XYZ has a tariff imposed on them, those companies within that country, they're now going to have a tariff. And as we look at a given business and we look at their supply chain, how much of that is going to increase the cost to their customers? Are they going to pass it on to their customers?
Sure.
Once we understand what the tariff is and how it's imposed, we then can back into whether we still want to own that business or that fund. We just need a little more time. Hopefully our investors will understand that.
Tariffs aren't new.
No, they're
they might
not.
be new in the news, but they've been around for a long time.
Absolutely.
And what I hear you describing saying is really tariffs are a tool that kind of like traffic cones on the road. Demand doesn't stop. It just redistributes the need and the flow of where those items or products may come from or how they're delivered. Am I correct in
So
that?
very well said. You think of just the American automobile industry, and you think of there's countries, I won't mention them, but that impose tariffs on our automobile manufacturers. And you go to countries in Europe, and you rarely see a Chevrolet or a Cadillac
Sure.
or a Jeep. And there's a reason for that. But you see that country's given automobiles on our own soil because we haven't reciprocated a tariff on them yet.
Right.
Here's the thought, I think it was well said today, Michael. The question is, what happens if the president says, okay, you imposed a 10% tariff on us, we're going to do the same to you, and they say, oh, no, we really don't want to have that tariff on us. Why don't we just go 0-0? That could be a scenario.
That's
That
great
helps
for the
people.
consumer.
Exactly.
Yes.
So we have to wait and see. But I love your question.
Very good.
So, yeah.
All right. Well, once again, thanks for joining us for this month's market update. I hope that you find these segments valuable in your education and learning about how the market works. As always, if you have specific questions about your portfolio, give our office a call. And we're happy to go through each of these components and how it may impact you specifically in the investments that we hold for you. Thanks. Have a great day.